It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, welcome back to the Real Estate Breakfast, talking about your property news, of course, and all that information 7 days a week from Port Macquarie to Adelaide. And good morning to wherever you might be listening in those two areas. Don't forget, if you'd like to share your property journey, you can do that. Our email address is myrealestatepodcast@gmail.com. It is a Wednesday, May the 7th. Now, here's an interesting story this morning. For the past 25 years, Mario Salcedo has decided not to buy a home for himself. Instead, he calls cruise ships home. Now, he has logged, can you believe this, 1,000 voyages and has spent more than $100,000 a year at sea. What's been the result of this? Well, he's lost his land legs, literally. After so long aboard, walking on solid ground feels like he is swaying, and he's been diagnosed with a syndrome that I can't even pronounce this morning, which feels exactly like that. You cannot sort of stay in a straight line. You're swaying constantly. So I guess, if you're out at sea all that time, that's what happens, Mario. Let's catch up with Eliza, Owen, head of the Australian research at CoreLogic. And good morning to you, Eliza. Welcome back to the Real Estate Breakfast. Got to ask you, have you been on a cruise ever?
Good morning. Thanks for having me. I got to say, I haven't been on a cruise. No disrespect to anyone that has, but I believe it's one of those things that older Australians would typically do, maybe when you get to a certain age. And in fact, I've actually heard of some Australians using cruise ships as a retirement strategy because they get all their meals and laundry services covered and they get to see the world at the same time.
Yeah, you're right. There are a lot of people, a lot of Aussies that are doing it. In fact, if you are listening to us this morning on a cruise ship, drop us an email. We'd love to hear from you. Now, the last time that I did a cruise, it was back in 2015, Eliza, sailed out of Miami around the Caribbean. It was 11 days, too long. Never do that again. We got food poisoning, my partner and I, as well as a virus, stuck in the cabin for 3 days. Got to say, I was so pleased that we upgraded and had a really nice balcony, because without that it would have been hell. That was my last, probably my last ever cruise ship, I think.
I'm reevaluating the economic benefits of the cruise after that story.
All right. Now, you had a recent article which threw up some interesting questions on the Australian real estate market. A central question being, should policymakers actually allow home values to decline while political leaders rush to offer more assistance to first-home buyers? I think you were saying many of their proposals focus on boosting demand without addressing the core issue, limited housing supply.
Yeah, that's right. So a lot of what we saw in the lead up to the federal election were these proposals increasing demand from first home buyers, whether it was increasing access to the home guarantee, the 5% deposit guarantee that the Labor government has in place, or the Coalition's proposal to deduct interest off of taxable income. Either set of policies we believed would have a certain inflationary pressure on values at the lower end of the market. Now that the Labor government has been successful and not only has another term, but has another term with a very strong majority in the House of Representatives, it's likely that that expansion to the home guarantee is going to go through. They have proposed 100,000 dwellings constructed for first home buyers, which will help satisfy some of the additional demand. But at the end of the day, if you're continuing to fuel demand without relieving some of the challenges in the construction industry, it's very likely that this will lead to upward pressure in prices.
Yeah, and despite the fear, we should talk about this as well, despite the fear surrounding declining property values, the data paints a more reassuring picture for the majority of Australian homeowners. Your recent analysis shows, in fact, that even with a hypothetical 10% drop in national home prices, nearly 89% of sellers would still make a profit and median gains would remain substantial.
That's right. So the reason I looked at this was because as we went through the election campaign, both Claire O'Neill and Michael Sukkar were asked whether they would actually want to see housing values go down, because that's got to be ultimately the answer to more affordable homes. Both said they would prefer to see prices continue to rise, albeit less than incomes. And the concern that was raised was negative equity. Now, negative equity just isn't that big a concern for most homeowners in Australia. About 1% of homeowners are in negative equity, which is where the value of your outstanding mortgage is more than the value of the property. In part, that's because of strong price rises. But the RBA estimates that even if property prices went down by 30% tomorrow, still about 90% of mortgage holders would still be in a positive equity position. And then if you want to take the argument further and say, okay, even if you're in negative equity, that only really becomes a danger if you fall behind on your mortgage payments and you need to sell your home. In reality, most owner-occupied mortgage holders are 2 years, or sorry, not most, but 40% are 2 years ahead of their mortgage payments. The arrears rate, so the mortgage arrears rate is only 1%. And then on top of that, even if we did reduce prices by 10%, as you say, there's still a lot of profitability in the Australian housing market. 90% of home sellers would have made a profit if they'd sold for 10% less at the end of last year. And the median profit from resale would have been $260,000. So any way you look at it, I think it's fair to say that Australians can afford at least a modest reduction in their home values from where they are now.
Yeah, no, that's really interesting. Interesting stuff. Now, April housing data. We should take a look at this. How did it all shake out for you?
Well, contrary to the article where I said housing prices could go down, they didn't. Surprise, surprise. Australian home values were up another 0.3% in the month of April nationally. Now, home values were fading a little bit at the end of last year because of things like cost of living pressures, high interest rates. But ultimately, the February rate cut saw housing values rising again from February, up 0.4% in March. And so the growth rate has eased a little, 0.3% in April. But what was pretty remarkable about that month is that each of the capital cities experienced a growth in housing values on a quarterly basis. So it's a very broad-based benefit that has been seen in housing values from the February rate cut.
Okay, so let's have a look at the RBA later this month. Of course, they're having this all-important meeting. Some people are saying, well, it's probably going to be 50 basis points, potentially. Others are saying 25. I don't hear too many people saying that it's going to be unchanged this time round. What do you think? Where's the good money?
Yeah, so I think an expectation of cut is pretty widely held at this stage. There are varying levels of certainty. So Westpac has said that the call of a rate cut is cemented by all of the recent economic uncertainty that's been thrown out from Liberation Day, Trump's tariffs, and the downgrading in economic growth globally and in Australia as a result. The RBA will need to proactively do something about monetary policy to get ahead of the impact of those tariffs. But CBA have articulated that the rate cut is not necessarily a done deal, though they too are expecting a reduction in the cash rate on the 20th. They argue that because inflation is only just trending in line with where the RBA was forecasting it, they do have a little bit of flexibility to hold rates if they see fit. But ultimately, I think that, it is that wide-held expectation. We would expect that as well, that we will get another cut this month. And ultimately, that's going to be a tailwind for housing market values as well. Whenever you have something that changes the access to finance or increases the access to finance, that puts upward pressure on values.
Now, you mentioned the trade tariffs. Have you guys done any sort of modelling with regard to what that might do to the real estate industry? Because I just saw today them talking about how long it's going to take to rectify. So even if Trump decided today to change things, by the time that all goes back to some sort of normality, it's going to stuff the economy for some time.
Yeah, I mean, the good thing for Australia is that the US makes up very little of our overall export market, about 6% of exports. But it will affect our major trading partners, which is probably more where there could be an impact on the Australian economy. For the real estate market, though, we don't expect too much of an impact, just because you have the massive tailwind of economic uncertainty increasing the likelihood of lower interest rates. And at the end of the day, that's one of the most powerful short-term influences on the property market and will be one of the biggest factors to look out for in 2025. There's still a lot of latent housing demand. So even if there is some weakness in the labour market, it's very, very tight. We're talking about an unemployment rate that has been structurally lowered over the past few years. So that's going to help to underscore housing demand. And also from a supply perspective, because we are still limiting housing supply, that will keep a fall under values as well. It's worth noting that broadly, during times of economic uncertainty or negative economic shocks, when you're looking at the GFC or COVID or these recent tariff announcements, what tends to happen is that the number of sales and listings declines, but the value of real estate holds up. So buyers and sellers might hold back from the market, but just because you don't have as much buying activity doesn't mean that prices plummet, because for every buyer that holds back or unit of demand that is held back, sellers just wait for a better time to sell. And so that ends up tightening the supply on the market for sale.
No, that's really interesting. Just imagine, though, you got your trade tariffs happening, as you say, in a market where the interest rates are going down. But if the trade tariffs were right in the middle of COVID and everything going up, my goodness, things would really look a little bit dicey, wouldn't they?
I mean, I've got to say, I've never done modelling where there's been two major negative economic shocks at the same time. Thankfully, that hasn't really been too common. But again, time and time again, what you'll see is a temporary drop-off in the sales and listings of home values, but because Australians are so well placed with their mortgage serviceability, they don't need to sell if demand is weak. And so ultimately, you'll just see a drop-off in the sales and listings, and values will continue to hold fairly strong over time.
All right, well, we'll see what happens later on this month, particularly with the RBA rate announcements. Eliza, I'll let you get back to what is no doubt going to be another busy day. Thanks for coming on to the Real Estate Breakfast this morning.
Great, thanks for having me.
Each week, we bring you in-depth real estate discussions, including inspiring stories from homeowners, knowledgeable real estate professionals and economists. Whether you're a buyer, seller, or just a real estate enthusiast, we are your ultimate property podcast. Explore new property destinations where you could live with exclusive interviews covering real estate news and market insights.
So banks are very hesitant of giving higher loan amounts on brand new builds, but properties that are fully renovated, that are basically wheel your suitcase in ready to go, those are the ones that seem to be doing quite promising. Like these are the ones that are averaging 7 to 14 days on market.
So what is happening in the space of Hobart's buyer demand right at the moment where we are? Because we're in May.
It seems to be like this little rush before the financial year. We've got a few guys that are either both wanting to sell, or obviously for tax purposes, and vice versa, people wanting to buy before that bracket comes through. So there does seem to be this quick little bit of demand coming through.
From the email coming in from Trey and Denise, just 2 years of saving and they're hoping to buy their property this year. That ain't bad, is it?
That's fantastic. Well done. If you've saved up a deposit and it's only taken you 2 years, that's fantastic.
We connect you to the best real estate information across Australia. The Real Estate Podcast.